Hey traders, Michael or Mini Frost here. You're here for another episode of Common Sense Market Analysis. Today is Thursday, November 20th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, as you can see, the market issued some pies in the face and had a little bit of a fake out situation. More so, NVIDIA was the one to start this whole shenanigans. Yesterday they came out with earnings. Today they were opening at around 195.95, also near the vicinity of a big fat round number, and then came all the way back down. So NVIDIA was the one to shoot this thing right on up when they came out with earnings. Today the market opened at around 672.91. That's about $10 away from where we closed yesterday. We made a run of the 20 period moving average home base, and then that was pretty much all she wrote, and then crapped all the way back down, even spiking through and closing below that longer term pivot number at 660. We were saying yesterday that obviously in the shorter term perspective, the trend has shifted. We are in a downtrend right now. And on top of that, we were staying below some of our key important levels. One example was this breakup candle low. We were talking about that low pretty much the entire week. As you can see right here in this area, we were eating time off the clock below that number. In addition to that, we were also respecting this trend line, staying below it. And then if we clean this up a bit, we see that we also had the formation of a bearish flaggish pattern forming, eating time off the clock for another move lower. So we had a ton of things in our favor that was pointing towards the downside. But then NVIDIA comes out with earnings yesterday, and being the powerhouse of the stock market itself, it shoots the market up. Because we're in an environment where the market is significantly concentrated and influenced by the Mag 7. And that's pretty much the basis of this fake out situation. We had a ton of technical factors that were pointing towards the downside. And prior to today, we were still extended from home base, which was even more of a reason why we needed to come down and make sure we touched home base. As you can see today, we landed right on it. Funny how that works. We've been super extended from home base all this time, and now we finally made our way back to it. So it's pretty crazy how NVIDIA and all of the other Mag 7 stocks, Apple, Amazon, Meta, Microsoft, they all hold such immense influence towards the market, especially because of their continued advancement in AI. We're in an AI world right now. We just gotta face the facts. And it's having a little bit of a manipulative pattern within the market. So this was an entire fake out situation. I kept mentioning that I think we do still have some more downside potential, which we obviously just saw today, because I was a pretty big believer that we needed to go ahead and touch that 20 period weekly moving average home base, which we finally did today. Hallelujah. So now where in the world can this thing head down to? Well, we have been talking about two very important numbers that you should write down on a sticky note. One of those numbers is a give or take number at around 650. That's a big fat round number. And then also we have one towards 647.24. I would certainly write those numbers down on a sticky note. They are important magnetic numbers. And I'm expecting the market to run a test near that area and at least provide some support, at least from an intraday perspective. Now, we don't necessarily have to get there tomorrow. We can have a little DCB, a little eating time off the clock. That's normal garden variety behavior, especially after a move of this caliber. It's normal for the market to reset itself, recock the gun. But as always, anything is possible within the market. But those are just the options that I'm laying out on the table. If we do manage to find some support near the 100 period daily moving average, which is pretty much the 20 period moving average on the weekly chart, then we could start to climb this breakdown candle. Also, a target that you should certainly still be aware about is 660. That number is not out of the picture just yet. It's still our longer term pivot number, and it's a number that's magnetic to the market. So I wouldn't be totally surprised if we find some support near this area right here and then try to make our way up towards the pivot. But now the question is, would we be able to get above the pivot and close candles above, or are we going to use that number as overhead resistance on the way back up? But staying below that pivot number and still continuing to close candles below is extremely important, especially tomorrow coming into the weekly close. That can certainly mean some more downside potential. What do we got for inside the numbers? Well, we didn't really have any standout opportunities for us. In the morning, it was a little bit of a slower tape until the market just released all their energy at once. But we could still go over a thing or two. Let's scroll up to around 910. What's the scoop for today? The first overhead resistance number is at 674 for a potential trade on the board. And then right here, 672.60 to 671.75 was originally overhead resistance, but now as we got above it, they could be utilized as support on the way back down. And then I said pretty much all of that once again at 925. To the right of the vertical line is today's activity. You got support number 1 on the board, you got overhead resistance number 1 on the board, As you can see, first 5-minute candle of the day ran right into that first support number and then ripped it right back up. Where to? That first overhead resistance number at 674. We did come up a little bit short of that number, so this does constitute as a first time best time situation, so we weren't necessarily looking to trade. We were looking for either a spike of the number or to the next overhead resistance zone. The next overhead resistance zone up above, which you'll see in the notes, it was near 675.80, 675.90, give or take. So we never quite got there, pretty unfortunate. But as you can see from that 674 number, we hit it, spiked it by a touch, and then came right back down. Where to? That support number. So you could have had a little early morning trade if you took the 672.60 number. That was a trader's choice on the board, but we didn't really have any standout opportunities today. Really wanted price to get up into that next zone at around 675.80. The market doesn't always give you what you want. Would have been a nice trade, but obviously what can you do? Towards the end of the day wrap up, when we started heading a little bit lower, I did mention that longer term pivot number, even though we were pretty far away from it. That was at 660. Let's go ahead and make this green. I said that you shouldn't totally disregard that pivot number. And funny how we spiked it by around 60 cents or so, but did find some initial support off of it. Came back into that pivot number right here, spiked it by a touch, and then came right back down. That longer term pivot number is certainly important for the market. And just because we're about $8 below it right now, doesn't mean we can't go back to that pivot number, as you just saw today. From the open today, we were $12 away from it, and somehow we did make it down to that number. Definitely got to keep an eye out for that longer term pivot number. As always, you can pause the video, read the notes, and go back to the chart to double check the work. 931 went right into that first support number and already gave you the base hit plus some extra juice. And then right here, first area of overhead resistance, 674, we did come up a little bit short, so we could look for a spike through or be conservative and wait for the next number up above at 675.90. Unfortunately, we did not get there. Again, pause the video, read the notes, and go back to the chart to double check the work. I do want to show you guys a little lesson that I think is very important, and it could have produced a little extra trade. And it's actually a trade that I took myself today. So, at 9:54, I said, notice how we're utilizing this number, I'm talking about the 674 number, as support on the way back down, closing candles above it. Extremely important. When we see that, and we're utilizing a previous overhead resistance number as support on the way back down and closing candles above, that's a bullish sign. And it's telling you that she's building energy for another move higher. And I said it's easier to see it on a 1-minute time frame. You can see that there's a bullish flaggish pattern forming as we continue to stay above that 674 and close candles above. So enough talking, let's go ahead and take a look at the chart and get a better visual perspective. So this is the area that I'm talking about. As you can see, we broke through that 674 number. We formed a big breakup candle. Then what we did was we started to trade within that breakup candle, creating an inside bar pattern. And then notice you can see it multiple times. We came back down to that 674 number and kept utilizing it as support on the way back down. And on top of that, closing candles above it. And that was a pretty bullish sign that we had another move towards the upside. And we know that when we get these breakup candles, the low right here can be utilized as support, or at least the vicinity near the lows. And that's also the place where we know we would have been wrong in the trade, because the inside bar pattern would have broke if we started to come down and close candles below this low right here. So I noticed that we had an inside bar pattern forming. We came down to that 674 that could have been an entry, saw that we kept closing candles above, which was a very good sign for the bull case scenario. And I knew that if we got below and started to close candles near the low of this breakup candle, the trade is wrong, and I would have stopped out. But I had a lot of things going for me that showed that the market still wanted to push up higher, putting the odds in my favor. A target that I mentioned towards the upside was at 675, a big fat round number. And also when we broke through this high right here, and closing candles above, we can see that we had a symmetrical move towards the upside from this break up candle. So if we just copy over that line and attach it right here, we can see it wasn't absolutely exact. We're not in search of perfect. Nothing in the market is perfect, but it was a pretty symmetrical move towards the upside. Made a high of around 675.41. All of these trading techniques that you've just seen and way more is all talked about in the MSF Masterclass. And we're running a Black Friday special, $750 off. In addition, you get the magic calculator for life, just as a little added bonus. You can see all of the course outline. You got technical foundation, the root of all numbers, gaps, psychology, the pre-market routine, cycles, all about trading and execution. It's literally the culmination of my dad, David Frost, his entire 30 years of market experience, all compacted into this one single course. Inside of the course, you can see all of the session recordings. It's a lot of content, lessons, examples, pretty much everything. On top of that, we have timestamps for each topic that was discussed so that you could easily navigate through all of these lessons. And as you can see, they're not small lessons. This one was almost 3 hours of technical foundation, almost 2 hours for the root of all numbers. It's almost around a 15-hour course. This is the real deal. This is 30 years of market experience into one single course. And then of course right here you got the magic calculator and plenty of other stuff. There's only a limited supply remaining, so with that said, you better get on your horses. Let's go ahead and take a quick trip around the world and take a look at the other markets, starting with Camp IWM. We're down 1.85% today. Nice down day all across the board, and we're approaching that zone that I mentioned, which is this breakup candle low and then the gap right below it. It should be an area of some short-term support from an intraday perspective. It's a place where we were previously eating time off the clock. Right here, eating time off the clock. Again, right here, eating time off the clock. The market is certainly attracted to those areas, and we could use it to our advantage to put the odds in our favor. Not to mention this zone falls in line with the midpoint between the 100 and 200 period moving average, and also taking the fib tool, this low right here, to the previous all-time high, we can see that that also falls in line with the 618 retracement, the golden ratio. So definitely a few things that put the odds in our favor. Remember, we're always trying to build out the full stack. Once again, we could have a little DCB, or at least hang around within this area for a little bit and try to work towards the upside of this breakdown candle. Taking a quick look at a weekly chart, we can see that we are now below home base, and it will be very important to see how the week closed regarding home base, and seeing if we could get into this support area within the allotted time, because time is more important than price. What's going on in my second favorite market leading indicator, the transportation department? We're down 1.40%, still utilizing this trend line as overhead resistance. We spiked right on through that pivot number, and we're heading down to the next number down below at 15,454. That is the next destination down below. If we get below that number and start to close candles below, then we got the last line of defense, the 200 period moving average. Closing candles below that pivot number and now in the vicinity of wanting to test the 200 period moving average, that is some trouble in my second favorite market leading indicator. But just clearing up some of the noise, taking a look at the weekly chart perspective, we are heading into that 50 period moving average that happens to coincide right with our number. And then right at these lows, you got the 200 period moving average. So it's not super terrible yet, but if we start to continue closing candles below these important numbers, then we could potentially have another leg lower. Just by the looks of it, we've been eating time off the clock for a while now in the transportation department. And just clearing up some of this stuff, we could actually remove all the lines just for now, even clear out some of the moving averages. What this really looks like is an inside bar pattern formation. You got a big time breakdown candle, and we're trading within that candle, closing candles within this candle right here. And we still haven't closed above the high of this candle, nor the low of this candle. We're just trading within it, hence the name a inside bar pattern formation. So if we manage to come back down and start to close below the low of this breakdown candle at a big fat round number at 15,000, then we could expect another continuation move down towards the downside. We got some unfinished business right at this gap right here that comes in at around 14,000, give or take another big fat round number. So we just kind of got to wait and see if we could break this inside bar pattern formation in the transportation department on the larger time frame. This is a weekly chart perspective. What about the Q people? We're down 2.37% today. Finally made it to the 100 period moving average. Quick look at the weekly chart. What do you know? Made it to home base. Finally. The market was too close and too extended not to reach home base. And in doing so, they faked out and issued some pies in the face to a lot of traders, thinking that we might just want to head back up towards the upside. But in reality, that 20 period moving average home base was the true destination. So again, that weekly close tomorrow is going to be uber important. Seeing if we could find some support near the 100 period moving average, which we stopped today, and then obviously seeing how we treat that 20 period moving average on the weekly chart. And if we start to get below and close candles below, then we do have some key important targets towards the downside. One of them happens to be a big fat round number at 575. I know I'm flip-flopping around here and there, but going back to the weekly chart, grabbing a fib tool from this low to the recent all-time high, that number comes right around the 25% retrace. It's another tool in our toolbox that we can use to our advantage. In addition to that, we were eating time off the clock in this area right here, so markets are obviously attracted to those areas, and it also was a previous breakout area. That's certainly a target towards the downside. Another target would be some unfinished business a little further down, and again at another big fat round number, give or take, at around 565. And again, looking at both sides of the tape, we can potentially find some short-term support in this area, start to work up towards the breakdown candle. Near the vicinity of the high is going to be overhead resistance, and if we do manage to get there, that can be a potential trade on the board. We'll obviously have those numbers ready for Inside the Numbers and live room members, but that's what we got so far for the Qs. What's going on in XLF, the financials? We're down 0.87%, closing below the last line of defense, the 200 period moving average. We do have some key targets towards the downside. We were talking about these numbers for a few days now. One of them is at 50.82. The next number down is a give or take number at 49.84, call it 50. Again, give or take. And what I said yesterday is closing below that 200 period moving average, we can expect some more downside potential. On a weekly chart perspective, we came up just shy of the 50 period moving average, coinciding right with one of our numbers at 50.82, a little spike through. That 50 period weekly moving average, if we start to get below, and especially close candles below, that's when people and money managers start to get a little bit nervous. So we have to see how we treat that moving average coming to the close of the week. Last but not least, we got SMH shaking my head, the semiconductors. Smash mouth. We're down 4.22% today. Obviously a little fake out situation, coming up just shy of the 20 period moving average, missing some unfinished business towards the upside. That comes in at 355.53, this unfilled gap. But now notice how we're closing below the 50 period moving average and also on the way down to home base. We've been super extended from home base, and now we're starting to get a little bit closer. So with SMH still the only one that hasn't reached home base yet, this can potentially produce some more downside potential in the other markets. SMH is the only one that's kind of lagging behind. But with that said, it's still on track to getting towards home base. One way or the other, the markets don't like to be too extended from home base. They always make their way back. So those are your main targets towards the downside, really being the 100 period moving average, and then the entrance to no man's land, and then if we start to get below that and close candles below, then we got the gap at 305.25, and we're gonna have some intraday numbers, of course, for Inside the Numbers and live room members. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're pulling the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐼𝐴. Please don't forget to like, comment, subscribe, all that good stuff, as it helps me and the channel out a lot. I hope each and every single one of you has a great rest of your day. As always, stay safe and take care now, folks.